just 6 hours ago was one of the most boring weekends that we've seen in Bitcoin and crypto for a very long time. And as I'm filming this, Bitcoin continues to break down each of the hourly bars, heading towards around $4,000 from that top. And literally in these last few hours, we've also seen Donald Trump FA and FO, essentially F around and find out. He has said this to the Colombian president, which is now retaliated with tariffs of their own. So I've got heaps to get through in today's video, along with long-term trends for BTC, for the stock markets, for commodities, and of course, some of those major altcoins. ETH also breaking down yet again. Solana on a bit of a slump here. XRP, SUI, as we've been covering over the last several weeks with this topping pattern coming through, and also PEPE, which is now breaking down past those critical 50% level lines that we put so much attention on. Make sure you subscribe to the channel. Each of the day's analysis builds upon the previous day, so don't miss out on the analysis that we're bringing you here for the stock markets, the real estate cycle, Bitcoin, cryptocurrencies, and commodities. All right, it's your home of macro cycle analysis. Link in the top of the video description is for our 4th birthday sale this week. In less than 24 hours, it'll be going on sale, TIA Premium. Now, all you have to do is click that link, name, email address, and check your emails for any of the sale updates coming through to you. Heaps of courses. There is a Discord community of active traders and investors. More on that later, but if you have been wondering about it, this is the time. Our 4th birthday sale, been around since the previous cycle here with TIA Premium. Plenty of links in the video description. We can talk about those later, but let's kick it off with old mate, mafia boss, Donald Trump. Love him or hate him, I guess that's up to you. The facts of the matter, which I'd prefer to stick to with this right now, with the emotions quite high, F around and find out. This is off his Truth Social account. Essentially, the long and the short of it, they sent Colombians back to Colombia for reasons you can read about yourself. Colombia didn't accept it, sent it back. Trump talked about 25% tariffs straight away onto Colombia, along with many other things, even doubling that in the next week. The president from Colombia has now reversed his decision and reportedly is now offering his presidential plane. I believe the reason for that is that they didn't want their citizens treated like criminals coming back in handcuffs. And I think that's why he's talked about offering the presidential plane. The citizens can come home, but they shouldn't be treated as criminals. I'll leave that aside, whether you believe it or not, or whatever your opinion is of that, or whether you want to get into the laws of it. But essentially that's what's going on at the moment, and this continues to develop as of course will. And now Colombia is looking to put 50% tariffs on US. That's the facts of the matter. Then you've got your own opinions. Now my opinion on the matter essentially doesn't matter, but if you want to know it, I think this is the sort of stuff that might lead to, I guess you could say, a lot of heat within the international community as we come towards the end of the cycle. Now, if you have been following the 18.6 year cycle, the 4th turning cycle, which happens roughly every 80 to 90 years, we go through 4 turnings, and this has been shown over the course of hundreds of years. The end of the cycle typically leads to some sort of war. It doesn't have to, but that's what we've seen over history. Now, I know this is a channel on investing and trading, but of course, we're all going to have to live through this world at some point. Whether you love him or hate him, different story, right? Trying to put these pieces together as we build towards the end of the cycle could be part of how this starts to unfold. Very early days. So we'll continue to obviously watch it here on the channel, which is why I suggest subscribing. It might be an opinion or a voice that you might not hear on other channels who are essentially pro one side or anti another side. I mean, I'm kind of somewhere in the center. Let's just leave it at that, and we'll see how things unfold. I don't think there's any point in speculating any further until we do see other things and how they unfold. The other things that are coming up this week, which are pretty high impact news of announcements, like very high, in fact, you have the US, in the US, federal funds rate coming out for us early Thursday morning. Obviously, it'll be Wednesday afternoon for the US guys. It's forecasted to be at 4.5% and currently still at roughly 4.5%. I believe it's 4.25 to 4.5. Doesn't seem like the interest rates are going to drop, even though Trump last week, as we covered here, said he wants those to drop. He's ordering them to drop the interest rates. And of course, this is obviously affecting the most amount of people. People, citizens of the US aren't getting affected as much by Colombians there, I guess. It could be argued, but you definitely want to see your groceries come down. You want to see your rents come down. You want to see, as we do here, you want to see your mortgage rates come down. You want to see fuel. You want to see these things sort of come down. So I guess this is a little bit more important to people. We'll see what happens. Maybe Trump's got some way of pushing this, pushing this to come down. Anyway, here it sits at 4.5%. Now, the other thing that happened last week, which is now some sort of affecting the markets, but not as much as what it did last time, which is interesting to note, was the Japanese yen. You've got the Bank of Japan policy rate. That was on Friday afternoon after we put out the video. Essentially, they increased their interest rates from 0.25% to 0.5%. And when that happened in August, everyone thought there was going to be another recession. Now, when you see it, it's barely, a word mentioned about it. So it's interesting to note how everyone wants to find out why something happened. And last time it was blamed on the Japanese, the Bank of Japan putting up the interest rates. They wanted to know why. That's, I guess you could point to it and say why. Because people want to think that, well, if that happens again, we might get a similar result, which I guess is natural and logical as human beings, right? That's how we've evolved over the hundreds of thousands or millions of years. But in the case of the markets, it doesn't matter. You had 0.5% and really not much has changed in the markets compared to what happened last time, right? So there might still be a bit of a drop, which is what we've seen. We've seen a mini flash crash here for the E-minis. You can see this drop. The market is opening in the after hours market. We haven't hit the pit session, which happens in about another 12 hours time. And the same thing for the NASDAQ. Also had a bit of a drop here. We're at 1.5% at the moment and still coming down. Now, I'm sure there'll be some sort of news events that come out or news reports that will say, well, maybe it's because of the Bank of Japan. Maybe it's because of, what Trump's doing right now with tariffs. Maybe it's because of something entirely different. We'll have to wait and see what the news decides to come up with. But nonetheless, it's all at this point, it's basically hit off the top. So the top there around 22,100 points. And for a short-term correction here, let's have a look at a short-term 50% and an extension for the NASDAQ to see where this could come down, because we're also seeing BTC have a bit of a pullback here. Now on the daily, as I showed in the intro, it's down about 3.6%. Actually, it's gone even further since I've been filming this. So from this entire swing, we can now see nearly 4%, so $4,145. And the close was slightly lower than I would have loved it to be. The weekly closed here at 102,563, and the new week has now continued to go down. And so I'm coming back to the NASDAQ to see if we do have some further downside, because we've seen them work, hand in hand, right? You got a little bit of strength there in the NASDAQ, happens at BTC, and the same in reverse. So in terms of the downside, could we still see some more downside? Well, at this point, it's come right up to the 50% level of the retracement. That's this one here, top to bottom, slice it through the middle, and it's at that 50% now. Now, if it continues to go further, we have the extension, which is the trading targets for a double top. So you got the double top here, that's at 22,100, and the 50% level comes in at 21,385. Now, we've talked about this at length with cryptos because it's the same analysis that we use on all the charts. So if this fails at the 50% level, it's unlikely that you'll see major moves all the way down within that same swing. But if we slice through the 50% here at 21,385, and of course this is going to affect BTC because we could potentially also see the weakness unfold onto BTC at a slightly larger rate. If the NASDAQ does 1%, maybe we see 2, 3, 4% for BTC. The next price targets to the downside basically line up with the previous swing bottom there on the 13th of January. That's at 20,676, 20,694, call it 20,700. So that would be the next target there, to be 100% of the double top. And then coming down to your 150% level, which I think is really important at this rate, is at 19,968 and 19,868. So a nice little number there, 19,900, maybe, dead on 20,000. The reason I say that's really important is if you start to see further weakness here at 21,385, probably likely you're going to see a test of this low here at 20,700, and then probably likely you'll get to the 150% of this particular move. So come back to this video, say in the next, I'd say the next few weeks. This could happen relatively quickly like we've seen in the past, nice big quick moves to the downside and a nice bounce out. Otherwise, it'll take a bit of time to unfold because it is a slightly longer term here. If we look at the overall time frame to develop this double top, that was 27 days. So I'm not expecting it to happen within a day. But yeah, over the coming weeks, if that is to unfold, then I'll be looking towards these targets. Now, the bullishness to this, I guess you could look at, is that you're still in a macro bull market with a nice healthy correction, because you're still dead on that 50% level of the August low to the top. And that could be a nice point for the market to find support and then build back to another new fresh all-time high over the coming quarter or first half of 2025. Remember, we've also looked at January and the first quarter at least not being as clean or as easy to trade as some of the periods through 2023 and 2024, where we're basically seeing the market go straight up. So that's the NASDAQ. For the S&P 500, we've also seen a short-term double top here at the moment. First target to look at to the downside would be the 50% extension, so low to high, which basically comes out at the 50% level as well. So look for a number there around 6,000 or 5,990, I believe. And should that break down, then we look towards these previous lows at 5,900, then the low at 5,800. So basically every 100 points here to the downside. See how first it reacts here at around 5,990 to 6,000 points, and then we look further down. Now the extension to 150% also lines up with the 50% level through the middle here. That's at 56.40. So another good area for a healthy correction over the coming days or weeks to then potentially build back from and head higher. Now another interesting point that we looked at just last week, which is playing out yet again, II. Basically your investors, which they've been doing surveys from over the last nearly 40 years, they were extremely bearish at the bottom and extremely bullish at the top. So this is your green here, week ending in the 22nd. So last week, think like Thursday, they were extremely bullish right here. Guess what? Nice little gap down. We haven't seen a gap down for a while on the S&P 500, and they were basically most bearish at this low, the 15th. So the week ending the 15th, they were most bearish back here. The report comes out on this day and the market pumps. So an interesting one to look at on the short term, where basically investors were most bearish at the bottom, most bullish at the top. So I think this is a reasonably reliable source of data to come back to have a look at, well, what were they feeling and thinking at the time. And the way I've seen it work, at least in the short term, is when you can get to more of an extreme level. So not necessarily in the middle, 30, you got a bit of a balance here, 35% bullish, 30% neutral, 34% bearish, but then you start to get really heavily weighted on one side. And the heavily weighted side was the bearish side, which happened at the low. I guess that's what you would expect, right? So that's a look at the stock markets. That's the US. I'm going to come back to the stock market, but just quickly finish up on these headlines here, as we were looking at with the Bank of Japan. Bank of Japan leaves door open for future rate hikes. So now they're talking about rate hikes, which might not, the market might not be as fearful of it moving forward. This week we've also got earnings week spotlight. Tesla, Apple, Microsoft, Meta. So that might play into, I guess, what the market is doing at the moment. Maybe people are de-risking, investors are de-risking with this bit of a drop-off at the moment. I saw a comment on that, so it was pretty interesting. And over to the stock markets around the globe. The other one in the last, over the weekend, was the top 50 in Europe. If you're watching from Europe, you've hit a new fresh high on Friday. Lower close, which is essentially not what you want to see, but it is only on the daily, and you've been up for 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 days in this swing, heading into a new fresh high, so at a very significant point. You know our 7 to 10 day rule? That's Gann's 7 to 10 day rule. If you're in the same direction, 7 to 10 days, there is a very high probability to expect at least a pause or a change in trend. And that can come in the form of straight down from here. It could basically pause out from here. Yes, you could still see slightly higher prices, but overall, you typically see the market at least take a breather from this point, which also helps you in your own trading. You can use this across cryptocurrencies as well, that it might actually just pause out because the investor steam basically runs out in those set timeframes. Even back here, you can see a reasonable 1, 2, 3, 4, 5, 6, 7, and a pause here. Not exactly towards the rules, but you can see that after these long periods, probably an ideal point not to get too crazy and load up at the end of significant moves like that. And all you have to do is check a chart. Over to commodities. Another thing that we've been talking about here is the possibility of inflation picking up later in the cycle and later in the presidency, not necessarily this year, but I think sometime later. At the moment, you're seeing oil have a bit of a pullback here, maybe after the comments from Trump saying we're going to drill, baby, drill. At the moment, it's come back to 73 bucks. It had been up for several weeks from this low in November. I am on the weekly, so 1, 2, 3, 4, 5, 6, 7, 8, with a small pullback here. And generally after these longer moves, well, you're going to see some sort of healthy corrections. Now, if I went back under $71, I'd say that this was a false move to the upside and it needs more time to consolidate, or it's going to break down and the old drill baby drill is actually going to happen. You're going to see lower prices with oil. But until it does that, this is all just part of a healthy pullback, somewhere around $71 to $74 before it mounts its attack again at roughly 80. Now, it has to hit about $85 to $86 to be an overbalance in price and then time. It can't break down from 66 bucks. That's basically the targets here. So if it can rise from here without breaking 66, it will already be an overbalance in time, and that would make it an overbalance in price. That signal essentially means that you're starting to see more buyers than sellers in the market. No matter what the president is saying, no matter what funds are telling you, no matter what the headlines are saying, what's actually being done is that you would see, if that happens, of course, you will have more buyers for a longer period of time, pushing the price higher than any time in the past in any of these essentially bear market rallies, right? You got the drop and then the rally. So we need to outpace this rally in time and price, and we're not there yet. Around $85, $50, $86 is going to be the target, provided it doesn't break down from $66 low. So that's commodities here. Over to BTC and some of the data points. We have the liquidations currently getting closer to $500 million in liquidations as I'm filming this. That's in the last 24 hours, of course. The new day has begun here on the set data points here. So the 26th, you had just over 300 million, and today we're at just short of 60 million so far as I'm filming this. But the overall 24 hours from now until 24 hours ago is coming up to around $500 million, which is a reasonable level of liquidations. For the fear and greed index, people are still very greedy on BTC. It's dropped to 71 after 73, a couple of days there. You had 75, 75, 73 for Sunday, and today for Saturday, and now for Sunday, it's at 71. So a bit of a drop off there in the market sentiment. And if I take this back to a daily and review what we looked at last week with this particular signal, if it is able to hold, you generally see a nice big pump to the upside. It can be multiple pumps, and the pump continues on. At the moment, we've dropped back underneath the diagonal here. So you could see that the lows were getting, or the highs were getting lower. So that's a downtrend. Then we had a break above, and we've broken back underneath. So the market sentiment really only held for about a day. That was around this period here when we had, I think it was the third pretty much the highest daily close in history. That was on Tuesday. The next reading came that day, and then from that point, we've seen it fall off. Now, I'm still not bearish on this particular pattern here because we haven't broken down from the 99K. The short term, if you're trading on your hourlies or your 4 hourlies, it's broken back underneath 102,800, so basically 103,000, which was that previous swing top. It was trying to consolidate above those levels. That was the area that we've been watching over the last week and a half. And from this point now, Sunday's dropped and Monday has also dropped. However, it could all be part of a nice healthy correction, quick swift one perhaps, volatility into 99K. If that is the case, goes a little further. For a stronger market, we must see closes back above 99, and then for the BTC price to come out of that area rather quickly and close back above 103 over the coming days. So basically this week, if it is to swiftly drop under 99, closes have got to come back above 99 very quickly and then get out of this zone pretty quickly. Because if it stays in this zone, then what the market is saying is we don't believe that the price is going to go higher, and you're getting more sellers come into the market, at least on the daily chart there. I guess let's flip to the bearish side of things. What some might be looking at over the coming days is potentially this distribution schematic, Wyckoff distribution schematic. And if you recall, I guess if you've been on the channel here for now 3 years, we're looking at the distribution schematics, or the accumulation at the time was back at the June, July into that November low. And we used the schematic, the accumulation schematic, pretty well to identify that this was going to be an accumulation rather than a distribution. And at the time, there were a lot of people looking for a distribution, especially with this double top, and they were looking for this thing to crash. And then at this stage, they were looking at that as another double top, and they were looking for that to crash. And if we take our extensions here, you can see that it looks like it probably failed just underneath the 50%. See that? As I just talked about before, there's 50%. There is your range, and look at what happened. It hit the 50% level, so 20,400, closed above it, telling you that the market is going to be much stronger than what that double top was potentially saying. Typically, a double top, you'd expect the market to come back down, test these lows, maybe even go further to around the 150% level. But in this case, it hit the 50% on our seasonal dates. Many other signals came out that day, so I won't blab on about that, but then it reversed relatively hard from there, telling you that there is a lot of strength in the market. What I'm looking at from here is the Wyckoff distribution schematic. Now, we also used it through this period here, and it was a rather weak distribution. So it was still a distribution, came through, hit the low, and then pushed higher. Now, at this point, you could also argue that it was a reaccumulation. So in that case, yes, you had the reaccumulation because the market then went higher. But on a shorter term, say like a 1 hour, 4 hour, you had the distribution play out. Coming up to a weekly chart, so then you got to work through your timeframes. It was a reaccumulation to higher prices that then ended, and the market went quiet for some time. So if we're in that at this point, is it a distribution to lower prices, or is it a reaccumulation like we saw December, January, and early part of February? Are we seeing a reaccumulation, which also looks like a distribution? That's yet to be seen, because we don't have a breakdown of the lows and we don't have a break out of the highs. We had a test and a fake out of the highs, but that close, which we just had in the last few hours, came in underneath those previous tops, underneath the swing tops, and the close wasn't the highest close we've seen. It was also weak on the bar. You can see how far down it closed on the bar. If you prefer your colored candles, it closed relatively low on that as well. Still yet to be seen, because we're in this trading range, and we've basically been in this trading range now going back to November. So we're starting the week of this 27th, so just over 2 months. We've now been in the same trading range between sort of $90,000 and $108,000. So we'll keep watching this. If you've got your own opinions on it, by all means, let me know in the comment section down below, but I think that might be coming up next. We're looking at the stablecoin markets now, and I've talked a lot about the double tops, double bottoms, and how they can play out. Looking for a strong double top or double bottom, or a weak double top or double bottom. Just, if I call it a double bottom because I'm looking at a double bottom, then just know that it happens in reverse as well, okay? The point that I was making with BTC, you had the double top, and it was a weak double top because it failed at 50%. So that tells you relatively early and then boomed up. Same thing can happen on the double bottoms. And what we're seeing here, this is on the stable coin. So this is I guess the positive for the bigger picture here, even if this rises, which is not good for cryptos and Bitcoins, or the bulls at least. This is bearish, and down here is bullish. Long and short of it is, this double bottom has not pushed away strong enough in a short period of time. Now, if you take a look at the previous double bottoms, this one in particular, it pushed away very, very quickly from that double bottom, up, down, and pushed away. And then you had basically a strong pattern for the double bottom. Now, if it doesn't push away too quickly, here's another example, taken a long time, there's a higher chance, so it's not impossible, but there's a higher chance that it will fail. So as I said, same thing goes in reverse. So if you want to throw this into an inverted scale, here is your double top in that case, and it wasn't able to push down relatively quickly. It tested it and then held out again, and then basically the double top bottom failed, okay? So for the bulls, ideally what's playing out here is that maybe we still see a test of these higher percentages, so more money going back into stable coins, but it might not be the worst thing in the world. It might just be a bit of a healthy pullback, flushing out the system again to get it all reset. And then over the course of 2025, we start to see it drop off again. And the reason I'm at this point leaning towards that is that this double bottom pattern has taken quite some time to play out. If it was going to be a strong one, you'd typically see it happen relatively quickly and then push up and break past those resistance levels. But for now, it has taken, you know, what the better part of nearly 2 months coming into this low of December, and we're nearly into the, you know, the first week of February. So will this double bottom fail? That's the next question. We don't have a clear breakout yet. We don't have a clear breakdown yet. Crypto Bitcoin bulls want to see a breakdown, and the bears want to see a breakout and go above 6.8% here. So this is a combination of USDT and USDC. And this is the typical chart that we've been following most of the time, which is the USDT chart. USDT is still underneath that 4.2% and still has a long way to go to break past 4.8, which of course would be much more bearish here. So things overall are looking like they're taking more time, but it's still not in a position that you'd have to freak out that, yes, the cycle is over. There can be healthy corrections, but it doesn't seem like we've got to freak out yet or if or at all. Total crypto market cap is also hanging on by a thread here, lower highs, a lot of closes underneath 3.5 trillion, 3.6 trillion as well. And it's on this bordering 3.3, 3.4 trillion and bordering on the speed line here, the speed of the previous move. That's September into March. That's how fast it was. And this is the same thing copied and pasted here. It's basically come out to exactly the same speed to the price, meaning if this market was to close at about 3.4 trillion next Monday, so 7 days from now, it'll be the exact same amount of time with the exact same amount of gains as what happened into that March peak. That's exactly where it lands out here. See, 3.43 trillion. Now, the downside to this is if it starts to close underneath it and underneath this 50% level, then it could use this line as resistance and start to find some more weakness and further downside. But there is also another line that I'm watching here is basically the low to the next low. And so that could just be all part of, you guessed it, another healthy correction. And that's what this low is here. If that were to happen, it's not the end of the world again, because you still got a pretty normal correction. Yes, it's going to freak everyone out. It's going to absolutely wreck a lot of people who are getting in quite late here. And that would then essentially flush the market out. So that would go down to roughly 2.7 trillion. It'd be about a 26% correction from the top, and it would still be above the 50% level of this entire move to the upside and still above the previous tops of March. The only thing it would be underneath is the previous old all-time high going back to the November cycle. But at the end of the day, I don't necessarily see that as the worst thing in the world. It's only bad if it starts to close underneath 2.7 to about 2.8-ish level. We can come back to that, but really if it does start to close below there, you'd have to wonder whether this cycle is over at that point. But anything to that point there, pretty well healthy correction. How could it get there? Well, you got some nice weakness continuing here with ETH. Here is that 50% level again. It's testing it at 3,200, looking like it wants to come back and test 3,120, which would then push it back down to 2,930. So there's still no confirmation here of a breakdown or a breakout. So we've got to keep our eyes on both levels. That's 3,500 to the downside, roughly 2,900. Solana, however, has started to break down from those previous tops and now coming back to test $232. Breakdown of these lows here at around the 230 mark, come back and test 18 to 20, and then the next major 50% level. We'll cross that bridge if it comes to it, but they're the areas to watch out for. Overall, this hasn't not been the greatest for Solana after going up for another massive pump. Really needs to hold out here, not really much lower than 220, and consolidate to try and test those levels again. Next up, XRP, obviously the strongest of the bunch for now, but still failing at 50% on the extension, and the flip side, it's holding above 290. So it's between a very, very tight rock and a hard place. You start to see it close underneath those tops, start to question whether you have put way too much money into these things near peaks again, or if you're just going to wait for the corrections here. So look towards some of those previous levels around the 250 and either the previous swing bottoms. Not there yet, still in the best position out of the other three that we've looked at. So we'll worry about that if it does break down from these lows. I'm going to put an alert here at around 280. And the reason I mentioned that for XRP is that if it starts to close underneath those highs, you could end up with a pattern that's as to what's happened with SUI. And you know we've been following this now for weeks on the channel because I was concerned that there was a top forming. Now I can't ever confirm it on the exact day. Like here is that first breakdown on the 7th of January. So this is now 3 weeks ago. It came back up, tested above, lower top formed, came back down and closed underneath those tops. And you see it come back up, test it again, and from that point, it's come back down. And I said last week, if you were watching, this is going to be a key level that the market must hold if it's going to remain in a consolidating pattern in a strong position. Now, as it starts to break these levels, it just begins to get weaker and weaker and increase the probabilities that it is going to test lower prices before it tests a new all-time high. From here, it can test higher prices, but I'm saying very specifically before it tests a new all-time high. So call it $5.40. That would be a new all-time high price, because underneath here you've got around 450, 460, plenty of area that it could come up, test it as a complacency bounce, lower swing top form, and then come back down to 290 or so. But for now, that's probably pretty much confirmed what I was thinking there. This is at least on the short term that this was at least an intermediate top, but probably a longer top at this rate. So we're down now 30% exactly, $1.60 from the top, and the similar sort of pattern has played out from the previous top. So that's something we've been definitely trying to explain here on the channel, how these tops begin to form. And you can't see it at the time, like that's what we had at the time, right? That's all the information we had. But we're trying to get as close as we can, and you could see that it fell underneath the previous all-time high and was unable to grab a new fresh high price, or at least consolidate above key levels. This is one of the first key levels that it's really broken down from. Now we're going to check to see where it lands at around $3, if it gets there, right? Not to freak anyone out. Definitely not your altcoin, right? PEPE, last one here for the meme coins. Remember the 50% levels, especially if it's the entire bull market range 50% level. If it's, because that's essentially the whole game now. So this is all the way back to the low at 60 and all the way up to the top at 28. Now it has done it before where it's broken past the 50%, held out, and then climbed back above. So it did it in the previous one there in May. This one was very brief in April, 1 week underneath and then back above. So there was still a lot of strength there. And then we come back to the consolidation range. So basically the accumulation, it climbed down, held above the previous consolidation, and then pumped from there. But now we find ourselves a long way from that low there. Basically, a year and a half, coming up to a year and a half from that low and starting to break down from this 50% level. So it's not the end of the world. It doesn't necessarily mean that the entire game is over for PEPE or other meme coins, right? But if you start to see it come back underneath the previous swing tops and then these swing lows, that's probably telling you that the game is over, because in the past here, you had higher lows. So it was higher lows every single time. Let's throw this one in here so you can see where it could end up. And if we take logarithmic off, it's a long way for it to fall still to get back to around 900 on its price here. But that's where it needs to get to in order to confirm that the game is over here and that PEPE is probably going to take a little while to consolidate. So until it does that, yes, it could still be a very significant pullback. You're going to have to hold this in your portfolio. It's down now 53% from the tops, and to this line here, to this diagonal uptrend, to remain with higher lows forming, it could fall anywhere up to 70%, which is, I guess, typical and normal for a lot of altcoins to do, yet turn around and push to new fresh prices. But at this stage, you really need to have a line in the sand as to whether you take profits, cut your losses, or try to sleep better at night. So watch those levels now moving forward with a lot of these altcoins if they get that far. I'm not saying that they're all at that stage. XRP, much better position than PEPE. Obviously, PEPE has been running for a lot longer. But at the end of the day, it's your portfolio. You do what you need to do. For now, BTC is just hanging out at these prices. Slight pullbacks off the back of everything else we've looked at in today's videos, along with Trump and the economy and the stock market's also having a bit of a spat over the last about 6 or 7 hours. Going to be an interesting one now moving forward into tomorrow, whether we can hold this line at around 100 down to 99k. But I'll leave that till tomorrow. Like and subscribe. Link in the video description. The TIA sale is going on in 24 hours. 4th birthday sale, big sales there, especially for Aussies, because our dollar has come up against the US dollar. I'll see you guys back here at the next video. Until then, take care and peace out.